Hey guys, Mike here. So it was an interesting day in the market, wasn't it? You had the S&P finishing up green, you had the NASDAQ finishing down red, and it was kind of a mixed bag of things all over. You had your, growth stocks actually finishing down red. You had some more value / defensive plays finishing up green, and I'll show you all that right there, and plus some other stocks like Tesla and Meta and things like that. What you see taking place and what to expect probably next week. But what I think what took the markets off guard today, and a lot of people, was the CPI news that came out, right? We're getting CPI next week for the month of January. And remember, we're going to have that new calculation, which I told you guys about. But now we have some news drop today, and people are like, whoa, wait a minute. Because there's another one of those moments where you go, where are they getting this data from? Can we even trust the data? And here's what I'm talking about. So first, it comes out this morning. One of the members let me know this, and I thank them for it, which was U.S. December consumers' prices revised higher for the months of November and December, right? And so when you go through here, you can see the consumer price index edged up 0.1% in December rather than dipping 0.1% as reported last month. The Labor Department's annual benchmark revisions of CPI data showed data for November was also revised higher to show the CPI increase in 0.2% instead of 0.1% as previously estimated. And you think, well, that's interesting. But then this one came out, and you can follow Jason Furman on Twitter. He does a good job with this stuff. And he's been really happy with what's going on in CPI data. But then he comes out and says, some of that inflation slowdown that people, including me, were excited about might have just been a seasonal adjustment quirk. Core CPI for the last 3 months of the year goes from 3.1% to 4.3% with the new seasonal factors BLS just released. And what he's talking about is this right here. So this is month-over-month core CPI seasonally adjusted, right? And then I guess the previous vintage, what they were using, you see October, November, December's numbers, right? Average 3.1. All of a sudden the new one, I guess maybe it's the way they calculate or whatever it is, goes up quite a bit, right? From 3.1 to 4.3. And so you're thinking, how can that possibly be bullish, right? That can't be good. I mean, that's a big adjustment. So I knew year over year was going to get changed the way they calculate it. They're going to take 1 year's data from 2021, which they should, because it's the more current data to go off of, versus 2019 and 2020. For those who didn't see my video, I'll link it at the end so you know exactly what I'm talking about. Make sure you watch that, because the year-over-year number you'd think would be better, because now you're comparing it to a higher point, because inflation was way higher in 2021 than it was in 2019 and 2020. Now this month-over-month, that's something new that I'm seeing right there. And so if they're using a different calculation for that, I don't know what's going to happen next week, right? But you can guarantee if that calculation or whatever's happened with the seasonally adjusted stuff ends up raising it up and it comes in hot, you can pretty much guarantee that soft landing everybody's been talking about, not a good thing, right? And some other things you got to look at is the wages, right? This is the one Jerome Powell really focuses on, and this is what makes, baseline inflation when it comes to being sticky and stuff like that. And when you look at this is the Atlanta's Fed wage tracker, and you see the lowest earning quartile is actually flattening out and somewhat decreasing, right? So these are people that really need to keep making money, but that's kind of decreasing. But you see the people in the highest earnings quartile, that is still going up. And then when we look at a smaller set of the economy, we're talking about the growth tracker for leisure and hospitality, you can see that's just like a meme stock chart. It just continues to go up. And that's simply because I know in my area, of course, Florida's a big travel state, leisure and hospitality, but they can't find enough help. There's just not enough help here. There's not enough bodies. I don't know. People just don't want to work in that industry anymore or whatever. And so to get them, they keep having to raise wages, okay? And so let me know what it's like in your area if you're in one of those, especially like travel or touristy type areas. But here, can't find enough help. So that's just the way it is. But if it continues to go up, it's not, it's good for those people working there, obviously, but it's not good for price stability, that's for sure. And so, we're going to have to see what happens there. So, yeah, I think it's next Tuesday it comes out, I believe. And so it's going to be very interesting to see, what's going on with CPI. Let me know in the comments if you're more up to date on the month-to-month, seasonally adjusting calculation they're doing or whatever. That one really surprised me. The year-over-year, not at all. I already did a video on that. But it's funny to see Jason there on Twitter as I follow him. And he's been just all happy about what's been going on with inflation. And now he's like, uh-oh, that's not good. And so we'll see. But again, it's like I told mine in the Discord. I said, I'm not going to be shocked at all next month if we see that jobs data that came out where they said 500,000 or more jobs. I believe they said they ended up coming up with instead of the 34,000, right? If that ends up getting adjusted down, it's not going to surprise me. It's not going to surprise me a bit. And I can go on about how they basically calculate CPI anyway and gripe about it. I've already done it many times, so I'm not going to continue to do that one. I will leave it alone. But it is really stupid how they calculate it. And anyway, so getting into the charts today, because it was a mixed bag for sure. And what was one of the things we talked about happening last week was the market simply selling off, going back into this ascending triangle right here, which we were in forever and a day for weeks, bouncing back and forth until maybe we get to CPI, right? So no big deal. Broke the trend line, broke the double support line on the double top. And so, you got the MACD rolling over down at the bottom. That's not really that big a deal, because really you want a combination of two things when I look for. If you look at what happened last time the MACD rolled over on the S&P, if we go back here, you can see, oh, it rolls over, oh my goodness. And we sold off like 2 more days, right? And then we got this big bounce, which created the double top. And why? Because the RSI didn't go below 50, right? And then when it finally went below 50, that's when we got a nice little sell-off down to the bottom of the ascending triangle, which is where we bounced and started that fun journey. And of course, what saved the S&P was simply the fact that, as I put this daily range out right here, the optimal range is going to be 405 to 410, because there's a bunch of puts sitting at 405, right? And if we go over here and look, you can see right there, bounced at 405.01. What a coincidence that is. So that's what saved the market, because then, of course, all the other stocks started going up after that. And if you're new here, please hit that subscribe button. Really appreciate it. And if you're getting anything out of this, please hit the like and think about sharing the video, guys. And I get emails and people in the comments asking, like, what's the point knowing about algos and market makers and all this good stuff? This is it. This is what I'm talking about. You can use the algos to your advantage. Once you know algos are the ones that do 90% of these trades, and execution of orders is what I should say, not just trades, right? They execute all the long-term investments too. But this is the algos, right? And so what happened at 405.01? Did you see that big spike? That's called algos kicked in. Boom. That's called market makers like, we ain't paying out below 405. That ain't going to happen. Boom. That's kind of stuff. That's the game within the game, okay? And so pass it on to the next generation, because right now that's what's happening. There's a member who's nice enough to he's tracking it right now. I think he's actually trading on it too, and he's going to let us know what the results are as far as these daily ranges I've been putting out. But so far they've been doing pretty darn good, actually. So yeah, that's the inside information in a way, right? And so another thing it was interesting, I thought, was you always look at stuff like this, which is like this one I used to talk about all the time. I stopped it, but I need to get back into it, which is QQQ divided by the SPY, right? And so when you look, when we bounced off right there, that trend line, that's when we started seeing high beta stuff sell off. And what it meant was people were more kind of rotating back into, I don't know, you want to call it defensive or value, whatever you want to call it. But they started rotating more back into that stuff. And this goes all the way back to 2002. And you can see only 2 times we popped above that line. It was recovering from the dot-com bubble in 2020, right, when they infused all the money. And it doesn't mean stuff on the Qs can't go up at all. You can see we've gone on it for years, being underneath the line. But when you see that rejection, that's when you see a sell-off in the Qs, the stocks that are in the NASDAQ, is what you normally will see happen for a minute. But it don't mean they can't go up or anything. But it's interesting, and also let you know when there's some rotation taking place as well from the NASDAQ into the SPY. So just food for thought on that one. And that leads us into some of those stocks, right? So Meta, talked about this. Congrats. I know I bought some puts on this myself, and this is another one, right? Inside information. If you want to have a good risk reward, find a stock that has a huge gap like this, that's overbought and everything, and there you go. The odds are the algo is going to kick in as soon as it breaches the trend line or support line, and starts filling that gap, because it loves to fill gaps. 90% of them fill for a reason. Okay, and so far it's selling down, as you can see. And on the long-term time frames, you can see it may have some ways to go, but on the short-term time frames, I won't be surprised to see a bounce Monday or Tuesday, just because on the short-term time frames, it's getting oversold. It goes both ways. You get overbought, you end up selling off. You get oversold, you end up getting bought up, right? And so you can see on the 4-hour, the MACD's rolled over. Daily looks like it wants to roll over, but you go to those 15 minutes and 30 minutes, stuff like that, and it's oversold. And so it's getting that bounce, right? And so then, of course, Tesla's the same way. What are we talking about? Gravity eventually will take hold, right? It's been overbought like crazy for 10, 12 days, whatever it is. And so it has a 5% drop, right? And you got to keep that into perspective here. If you look at the run has been some crazy, 110% move, and is that 34 days? And guys, keep in mind, this is a large cap stock. This is not some piece of crap stock, some penny stock, some crypto stock. This is a large cap stock moving 110% in a month. That is crazy, right? And then when you look at, this right here on the short-term time frame, same thing. Gets oversold. What do you see happen? It gets the bounce. That's it's not like an accident. Algos kick in and go, ooh, it's oversold. I'm going to go buy. Ooh, it's overbought. I'm going to sell. I mean, this is what happens every day. This is the algos doing it. That's what happens. You can see MACD's rolling over on the larger time frames, just like you see on Meta. But of course, that doesn't mean the stock's just going to go tank somewhere. And understand with Tesla especially, like somebody said, it's its own ecosystem. It's the only mega cap stock I've ever seen move like this. Maybe some people might say Nvidia. I guess you're right. It has been moving like that, but I think Tesla has a much longer history or track record of this. And I believe, could be wrong, correct me in the comments if I am, I think it is the most highly traded stock when it comes to options as well. Could be wrong, but I swear I read that, especially ODTE options. And so, that's just something to keep in perspective, especially when it comes to that or whatever. But, also, let's keep another thing in perspective. On the long-term charts, which I just told the members, you have like the 10-week crossing the 40-week, right? For the first time in a long time. It's happened 5 times, I believe I put in there, since 2000. So in 23 years, it's happened 5 times, right? That's on a weekly time frame, right? And then you got the golden cross on the daily time frame. But then on the short-term time frames, it looks kind of short-term, kind of like, bearish, right? And so, not one day or not 3 days does a market make, but understand, what was it, Wednesday? I think I told you guys what it was. That was like, I'm talking about not this Wednesday, but I think coming into the week, we had 2,200 stocks overbought on the daily. You know what I mean? I just checked this right before I started recording this video, down to 88, okay? So that kind of lets you know this euphoric, rise. And what's caused it? That's why I keep saying, you got to keep this in perspective. Short covering. That's what this is. This rally, I swear 75% of it is a bunch of short covering, right? And now you're starting to see that fizzle out, right? That's why you see such a huge run up. And I said, when that starts to fizzle out, we'll see where we're at. Doesn't mean we're going down back to the October lows and all this crazy mess. And a lot of people think, and look, unless there's a black swan event, which there obviously could be. I can't predict them because guess what? You're not supposed to be able to predict them, okay? But some people are trying to right now. But understand, getting back down to the October lows, if we ever did go there, unless there is a capitulation moment, which most likely would be the black swan event, you're not going to get there easy, okay? The reason why we came up so freaking easy this time was because all the shorts just got burned. They got smoked, okay? They lost a lot of money holding on, okay? And people got in those bear camps, and they're like, I'm going to stay bearish forever. And then they're like, oh my God, right? And I say, be careful getting in those bear and bull camps. That's how you get burned. Just get in the middle, like following a tennis match. Just watch the data. Just watch the data, right? That's all you got to do. Just watch the data, see what's going on, because we are creating more 52-week highs than we are 52-week lows. Keep that in mind, all right? But what you got to do is you got to get all this crap stuff that's happening, these Coinbase stocks, these penny stocks, these bankrupt stocks, all this, you gotta let them fizzle their way out, right? That always happens. We run into this, oh my God, Bed Bath & Beyond 300%. And congrats to whoever got money in that, by the way, but obviously I hope you sold because you see what happened. But you gotta let that fizzle out, right? You gotta let the short covering fizzle out, and then when you see the cards left on the table, you say, okay, this is the market we're in now. And we could just be sitting in this range bound. It could be a nice little range, this range bound area for quite a while. Keep that in mind, right? This could be a trader's market for a long time, but it can also be an investor's market because you get in those range-bound areas and you go, I can accumulate stock, right? If it hits your price target, right? If it keeps bouncing up and down doing this range, right? Like Meta, if Meta closes that gap, and you go, wow, could have bought 200, but if it closes the gap, you're getting into 157, is that right? I believe. If Tesla does finally sell back down some, do you get it in the 170s maybe? 167, something like that, versus 214. That could happen. So keep that in mind, right? And so just want to, again, keep things in perspective. I think it's a good thing. A lot of people react off one day's movement and all that stuff. But the biggest thing, and again, I'm more confused than ever on the CPI now after reading that stuff I just read to you and looking at it this morning. I'm like, okay, I was kind of used to CPI. Now all of a sudden we got these new calculations, these seasonal adjustments. Man, what is going to happen next week? It's going to be very, very interesting to see. And also, we're in a market now where we were talking about this, and some people were saying, I've never been more confused. I'm like, because this is a confusing market. It's okay to admit that. This isn't a normal market. We've never had this many indicators flashing red for a recession with unemployment being where it's at, right? While at the same time, you have like 3 camps going on. You have people all of a sudden they're going, hey, I'm just going to play it safe. I'm going into CDs and treasuries and bonds and all that stuff. and stay in cash the rest of it. Then some people are saying, no, I'm just going to go with defensive stocks, right? The banks or whatever they're going to go with. And then some people say, no, I'm going into the Qs. I'm going into the Teslas and the Coinbases and all that fun stuff. So it's a big divide out there. It is a big divide. And normally in markets, which is especially real raging bull markets like we have for 10 years, everybody's going one way. Remember Tina, there is no alternative. That's what we had going on. Well, now Tina, we divorced her. She's out the window, right? So we got to come up with another acronym. So feel free in the comments to come up with one. But, that's just where we're at. Hopefully all that makes sense, guys, and so if you got anything out of it, hit the like, subscribe button. I'll end up seeing you guys Sunday, and I'll roll out what we got going on next week, because it's a lot. It's going to be a fun week. It's going to be a very volatile week next week. You thought this week was volatile? Wait till next week. It's going to be way more volatile. All right, and I'll tell you why Sunday. So have a good one.